Now, speaking of inventory, this number you can't game at all. So inventory is the true number of homes for sale over the course of a month. And in February, it rose 4%. And it's typical that inventory is rising this time of year. Although if we look back over previous years, we would have expected to rise more than 4% going from January to February. So inventory is not quite yet building. And we could see that by the previous chart that there were only kind of 17 excess homes when we compare the real new listings versus the sales. Last year, inventory peaked at 347. You can see the high point there. It was around September and October. And I actually predict, this is going to be a little out there prediction, but I predict we actually have a lower peak inventory this year because I believe inventory is going to struggle to build throughout the spring. The demand is going to keep up with the new listings. And then in the second half of the year, with interest rates coming down, you're going to see demand actually hang on, and you're not going to see people putting their homes on the market. It's usually spring is the big boom of that. So I think that we will look back and think that we actually had our peak inventory market of 2022, and low inventory is one of those indicators that we're going to have a hot, fast-moving market and prices are going to get pushed up. Now, this chart really shows a visual representation of the relationship between inventory, the gray bar, versus the demand, the red bars. And you can see on the left side of this chart, that was the hot market before the interest rates started going up. The red bars are actually taller than the gray inventory hiding behind it. And that means inventory was turning over faster than 1 month. It was an extremely fast-paced market. And then throughout 2022, you can see inventory building back up and that gap forming between the height of the red bars and the overall inventory in gray. But what I want you to notice is there is last spring, you can see how the red bars were building up and they were almost reaching the height of the gray bar. And that was until in June, July, we had 2 more interest rate hikes, and that caused the demand to slow down and some more inventory to eventually build. And that's where you get that peak in the back half of the year. Now, again, if we follow, the logical conclusion this year that the spring is going to be very typical and the same as last year, where the demand's going to build up and it's actually going to, be a pretty busy spring market. But then the back half of the year, we're going to have interest rate cuts. You could see how those lines can come together and you would actually have a sustained demand through the back half of the year, and inventory won't actually be peaking in the fall. We could have actually inventory falling in the fall and winter months to a new low point in the winter. This will be very interesting to watch. And it is really kind of on a knife edge here if it all plays out as expected.